Good evening, ladies and gentlemen. My name is Victor from the Star Events team, and I'm your host tonight. Thank you for joining us today for our live on web robo-advisory, the future of investing. This session in partnership with MyTeo and organized by Star Media Group Berhad is for 1 hour. It will be streamed live on Starbiz Facebook page, so thank you to everyone who's tuning in tonight. Do share our Starbiz Facebook Live with your friends and colleagues who are keen to join. The link is actually shared in the chat below. All right, a few quick housekeeping matters before we begin. As everyone dials in to this webinar through different internet bandwidth and devices, you may or may not experience minor technical glitches. So please be patient if there's any. To minimize the risk of technical glitch, all participants are muted, video cam turned off, and chat box disabled by default. But do participate by posting questions to our panel. On your user panel, click on the Q&A button and post your questions if you're using Zoom, or place it in the comment section if you're watching via FB Live. There will be a short survey at the end, so please take a few minutes to complete it. Your opinion really matters to us. Lastly, and most importantly, please engage, learn, and enjoy. For this exciting session tonight, we have the pleasure of having Mr. Raja Adam, Chief Financial Officer of Money Match. With that, I'd like to hand you over to Mr. Raja Adam.
Good evening, everyone. Very welcome for joining us in today's webinar, Robo-Advisory, the Future of Investing. My name is Adam, and I will be your moderator for this evening. We have 3 experienced professionals with us today to discuss this very interesting topic. Robo-advisors may be very young in terms of its maturity in Malaysia, but is gaining a lot of popularity globally since the emergence of Betterment, one of the pioneers in this space in 2010, resulting from the global financial crisis. In Malaysia, we've seen many robo-advisors being regulated by the Securities Commission and introduced in the market since 2018. So it's very timely for us to discuss how robo-advisors can help investors in their financial diversification. It's my esteemed pleasure to introduce the speakers tonight. So we have Rizwan Aziz, President of the FinTech Association of Malaysia. We have Matthew Stewart Box, the COO of GEX MD and Money Design Japan, and Ronnie Tan, who is the CEO of GEX MD in Berhad, which runs the MyTeo robo-advisory service. So a bit about Rizwan. Rizwan has over 20 years of commercially driven regulatory compliance and technology experiences in Asia Pacific. He provides business-oriented regulatory advice, solutions, and consulting to many financial services-related companies. Rizwan is currently the World Remits Country Director for Malaysia and the head of their ASEAN business, one of the fastest growing globally online-only remittance service headquartered from the UK and operating now in over 50 countries and servicing more than 5,000 currency corridors. Rizwan, please take it away.
Thank you, Adam. Good evening, ladies and gentlemen. Thank you for spending your evening with us today. I will actually share a screen with you, my presentation in terms of sharing the basic about fund management, as well as sharing about what you should know as far as robo-advisory is concerned. I hope you can see the screen that I put up. Okay, thank you. Robo-advisory is, as Adam said just now, is pretty new in Malaysia. It started in the US about a decade ago, and it has gained a lot of traction and very popular among the middle class in terms of gaining introduction in knowing how to do investment. Yeah. So I'm not gonna. What I'm gonna do today is I'm gonna speak about a very simple and very focused on what's fund management as far as the regulation is concerned in Malaysia, and specifically talk about robo-advisory and who are the players that has been licensed in Malaysia and those close to the definition of in terms of using technology. And I will also share in terms of benefit and risk of getting into fund management, specifically talking about robo-advisory. So as far as fund management is concerned, yeah. As far as robo-advisory is concerned, in terms of fund management, based on the Securities Commission licensing book, fund management is divided into two. One is looking at portfolio management, focusing on securities and derivative, or both. And the other one is talking about asset management, where business trust or managing real estate investment trust. So in terms of being allowed or being licensed to do either portfolio management or asset management, the SC focuses on 11 core principles, and this is where the interests of the investors are taken care of, especially those who are considered as the retail investors. The 11 core principles must be complied with by all licensed fund management company, and SC is diligent about making sure that these are complied with at all time. And this is why I think we must understand that regulation is pretty important. In fact, in my view, it's really important in terms of giving the protection that investors need to have, especially those who are just being introduced to fund management, and specifically talking about robo-advisory today. So as you can see, one of the core principles there is client asset protection, compliance culture, conflict of interest, where all licensed fund management company in Malaysia have gone through this review by SC, and not just one time, but SC continuously look at these 11 core principles to make sure that every single licensed fund management company are able to fulfill their obligation at all times. So when we talk about what is robo-advisory, robo-advisory focuses on digital platform that use algorithm-driven automation to facilitate creation of an investment portfolio based on each investor's profile, specifically looking at the goals and risk tolerance for each investors, and periodically using that algorithm-driven automation, rebalance it with little or no human intervention. So basic about robo-advisory, they look at how to onboard client more efficiently compared to the traditional fund management company. They look at who is investing, what's your goal, what's your risk tolerance, and they do have a better way in terms of knowing their customers and identifying their risk profile. They verify the necessary information, especially in terms of managing the money laundering and the counter terrorist financing. They look continuously in terms of customer due diligence as well as risk scoring each customers. And they always look at suitability of the portfolio in terms of whether it is suitable with the risk profile and the individual that is investing, as well as looking at the risk appetite and reporting and communicating to all the key stakeholders, including investors, including regulators, as well as other parties that's involved in the operation of the fund management. And most of the portfolio components are considered listed stock, ETF, fund, bond, cash, and there's always different kind of portfolio mix between one company to another. And later, this will be explained by other panelists in terms of how these work. So basically, it is different from the current way of doing fund management. And this is quite an exciting times in terms of how the regulators are introducing this into Malaysia market for us to then explore and for us to know about how robo-advisory work. And as far as the product is concerned, a lot of the focus is given on exchange traded fund. It is a combination of various type of securities that generally operates with an arbitrage mechanism designed to keep its trading close to the net asset value. So what it means is this ETF is actually very tradable, and it can be traded on a daily basis, close to its net asset value. And it also have an advantage of lowering the cost of transaction and covering a wide range of securities. And it can cover geography, types of features, and risk appetite suitable for the investors that's actually willing to actually go into robo-advisory and looking at adding their investment into this portfolio. And it actually also saves the investors from looking at specific countries, looking at specific stock, because ETF allows you to cover wide range of geography, wide range of market, and it also helps you to spread the risk better, in my opinion, compared to other kind of securities as well as kind of investable instrument. So it is interesting, and it is quite new, as mentioned just now, but this is something that has gained popularity, especially in the US. And this is something that I think should be further explored as far as robo-advisory is concerned. And all this has been actually verified and reviewed by the regulators, so that it will be something that has been scrutinized by the regulators to make sure that the investing public are covered well throughout their involvement with the product, with the fund management company, as well as their rights and recourse when it's needed. So as far as Malaysia is concerned, currently the SC has licensed 3 companies, which is tonight we have MyTio with us today. And I think this is a good opportunity for us to understand further in more specific areas about how robo-advisory work. And the other 2, Stashaway and Wahid, also has been also licensed by Securities Commission. If there is any other companies that's claiming to be a robo-advisory company, that's not true, because there's only 3 licensed in Malaysia. So be very careful about when you are approached by any unknown names or brand claiming to have robo-advisory license, because as far as the regulator is concerned, only these 3 companies has been licensed by the Securities Commission. The difference between robo-advisory and the traditional fund management company is the robo-advisors have also been reviewed in terms of the algorithm that they use, the kind of responsible person who knows about the technology as well, the cybersecurity side that they also need to be aware of, as well as different kind of investor protection on top of the 11 core principles that I mentioned earlier just now. So there's an additional responsibility that has been fulfilled by all these 3 companies, including MyTio, in terms of getting the blessing and license from the Securities Commission. And the glaring difference is all these 3 companies is using mobile apps and would be able to provide you almost on a real-time basis reporting about your investment and the decision to invest, and to whatever that is related to the investment is with the investors. And apparently the fees is much lower compared to the traditional fund management company. The entry point is definitely lower, and there's a transparency in terms of the fee structure. So these are among the innovation that has been introduced, that has been allowed by the regulators, which is suitable for the current appetite in terms of investing through the robo-advisory, as well as those who are actually using technology to facilitate investment. I would also would like to share about the benefit and risk of getting into this particular area. The benefit is obvious because you become a passive, you will be empowered passively because investors need not be active. And if you notice, all the robo-advisories that's been licensed would allow you to decide in terms of when you want to invest, how much you want to invest, and you do not need to follow the market diligently compared to if you are going directly into the stock market. And the ETF that they actually, among others, the ETF allow you to diversify because it's a versatile mix of various instruments that is put together, and the fees that is associated with your investment is really transparent compared to the traditional fund management company. And it is also very objective because it will allow you to avoid emotional or impulsive decision, because the robo-advisory company will keep updating you about what's going on in the market, and that would also give you a clear direction in terms of whether to stay in the investment or whether you want to change. But most obviously is it will allow you to avoid the emotional element compared to if you go into the market directly. And as I said, the fees is much lower compared to the incumbent, and you would also be able to use your mobile devices to follow your investment, to keep track of what's happening, and not necessarily have to visit the office or for you to be able to contact your fund management company, because it's all available in your mobile devices. Having said that, there's also risk associated to this. The limitation is obvious because you can't really customize if, let's say, you want it to be very, very specialized, because the investment that is being made by the robo-advisory company cannot actually be too specific in terms of following your risk appetite or your preference to the point where it is made specially for you. That would not be possible because it is actually an investment strategy that take into account the larger aspect of the investors that's coming to that platform. And of course, when you come and talk about technology, cyber threats will always be there. This is something that is common. This is something that is inherent when you do digital, have a digital platform. But this is something that is constantly being reviewed by the regulators, by the companies themselves, to make sure that this is being checked at all time. And I'm sure, as far as we know for now, there's no major breakdown globally about this, and hopefully that will stay that way. The other thing is the investing methodology is a black box approach. You can't really, you are not given the details about how the investment is being made. You will be given certain amount of information of how the investment philosophy is being done, but they will not be able to tell you exactly what happened at what price, is because that is really too much for you to be given that kind of information, because this is something that that came along with the technology that they have developed. And the other thing that I also want to share is, especially for ETF in the US, there's a dividend withholding tax as high as 30% for non-US person and entities. So I just want to take you guys to take note about this, because different countries have different dividend withholding tax. And because US is considered one of the largest ETF market, and many of the robo-advisories company are investing in the US. So I thought I would want to share this with the audience today, so that you are aware of the obligation for you to understand that there's a dividend withholding tax of 30% for non-US person and entities when they are investing in the US. So I'll stop there and pass it back to Adam. And hopefully that will give you some knowledge about the fundamentals about fund management as well as talking about robo-advisor.
Thank you, Rizwan. So also joining the discussion today is Matthew. So Matthew has over 20 years of experience in finance and fund management. At Money Design, which is headquartered in Japan, he is responsible for the investment platform, including overseeing all their investment portfolios and operational activities. As part of his role as the COO of GAX MD Malaysia, which is licensed by the Securities Commission to provide robo-advisory service, he is responsible for all operational and finance activities for the entity here. So without further ado, Matt, take it away.
That's great. Thanks very much, Adam. So let me just share some slides here. So I hope you can all see this. So thank you very much for your time today. What I'd like to do is cover three main areas. First, I'll give a little bit of background to my company, Money Design, and to GAX MD, a little bit about what we're trying to do. Then I'll provide a little bit more detail about the Theo product concept, how the product works, both in Japan and in Malaysia. And then I'll also try and give a little bit of background on some recent trends we've been seeing in terms of the activity of our clients, how our clients have reacted to the recent market volatility, things like that. So first off, just a quick introduction to Money Design. As Adam mentioned, we're a Japanese company. We were founded in 2013, sorry, so coming up for 7 years ago. And we were the first robo-advisor to launch in Japan. So we've got a reasonable amount of experience here. The management at the company come from a range of financial companies, people like Nomura and BlackRock, and then a range of tech companies, Google, Hewlett-Packard, and a bunch of smaller local fintech companies. And then just over 2 years ago, 2018, we set up a joint venture with Silver Lake in Malaysia, looking to take some of the expertise that we'd got in Japan and expand it and provide some of these digital investment services across Asia. And this is our first step in that direction. And together with Silver Lake, we formed GAX MD in 2018 in order to provide robo-advisor services in Malaysia. So we launched our product in Japan, named Theo, in February 2016. So we're just over 4 years old here. And then we launched the Malaysia version, My Theo, just over a year ago, June 2019. We've had some decent growth in terms of our total group AUM at the moment. We are just over 650 million US dollars. And we've just got over 100,000 customers in total. There's a couple of things that are kind of interesting about our customer base. Our customers tend to be relatively young. Certainly in the Japanese context, they're relatively young. About half of our customers are in their 20s or 30s. The other interesting thing is most of our clients have had very little investment experience before they joined us. So about 80% of our clients had little or no investment experience before investing in Theo. So we're very proud of this. It shows we're getting new people who haven't got any investment experience, to try investing for the first time. And so in a way, we're kind of lowering the hurdle for investors. We're glad about that. Our investors tend to have a relatively long investment horizon. We ask them when they join us, and over half of our clients say they have an investment horizon of 10 years or more, which is great. And then the final point is our clients tend to sign up for regular monthly contributions. So 70% of our clients, as well as putting in an initial deposit, they don't just leave it at that. They tend to add regularly once a month. And that's a very good way to build up your assets over the longer term. In terms of our stakeholders, we have quite a wide range of stakeholders, a bunch of venture capital firms, Japanese financial companies, banks, non-financial companies, people like Docomo, a mobile phone company. And then we also have this relationship with GAXMD as part of our link with Silver. So that's a little bit of background to us. In terms of the product concept itself, Teo is, has been described before. We offer a digital discretionary investment platform. And the key points there is it's tailored to customer needs. And I can talk a little bit later about like how we actually do this tailoring. But we ask our clients a number of questions to try and estimate their investment needs, their objectives, their investment horizon, and then build a portfolio that we think best matches their needs. And then, like a lot of robo-advisors, we use ETFs. All of our portfolios are implemented via ETFs. That gives our clients a very easy way of getting full global diversification. They're invested across the globe and across multiple asset classes. But these ETFs also provide a very low-cost way of implementing these portfolios, very transparent to the clients. In terms of why clients use a robo-advisor, maybe the most useful point here is the box at the bottom of this slide. This is from a survey that we did of our clients in Japan, asking them why they chose to use Theo. And the number one reason, 70% of our clients, they like the fact that it's fully automated. It's very simple in the sense of once they've set up the portfolio, they don't have to do anything else. We'll look after all of the rebalancing, maintaining the portfolio, ensuring that it's always at its best allocation of assets, updating whenever the market moves. The client doesn't have to do anything. They can see what's in their portfolio at any point, but they don't need to make decisions on an ongoing basis. They can just keep the assets with Theo and trust us to keep them fully invested. Got a couple of points maybe on the kind of the size of the market. This might be a little bit useful in terms of how the Malaysian robo-advisor market might develop in the future. In terms of the size of the robo market, we estimate that in the US, it's around 600 billion at the moment. So obviously the US, as was mentioned earlier, it's got a much longer track record. It's been around for about 10 years. It's up to about 600 billion there. The Japan market is younger. It's really only been going since we launched 4 years ago. And the total market is up to about 5 billion, we estimate here. But the potential size of the market is huge. In Japan, total financial assets of households are about 17 trillion US dollars. But as people well know, Japanese investors tend to be relatively conservative, and about 50% of these assets are just sitting in the bank as bank deposits. And so even if robo-advisors could persuade 1% of Japanese investors to shift to robo-advisors, that would still be a huge market. So from our point of view, it's a very attractive market in terms of long-term potential, long-term growth. And I'll just mention a couple of trends that we've seen in terms of our client activity recently. This might be relevant, I think, for investors in Malaysia as well. So obviously we've had a lot of volatility over the last 3-4 months. A big drawdown starting in March, and then a gradual claw back up over the following months. Huge amounts of uncertainty. But what we've seen in terms of the response of clients in Japan has they've remained very calm over the last 3 months. We've had a very low level of withdrawals, lower than our normal average level of withdrawals. despite all the volatility. And our clients have tended to maintain their regular monthly savings plans. I know it's been very tempting for people to want to kind of step away from the market during this period of volatility, wait for things to calm down, wait for things to become more clear. But the fact is, volatility is a fact of life in financial markets. It's almost impossible to predict where the market is going to go over the next month. And for an individual investor, as well as for an institutional investor, usually the best approach is simply to maintain your current investment plan and keep doing regular monthly contributions. And that's exactly what we've seen in terms of our client activity in Japan. We've also seen a steady flow of new account openings, clients looking at this kind of volatility as an opportunity to start investing. But a bit overall, we've been very happy with the way that our investors, our clients, have remained calm, haven't panicked over this period of market volatility. I'll maybe just mention one other thing, because it's been mentioned earlier on in terms of customization. In terms of where we think the market for robo-advisors might be going in terms of developments over the next few years, I think customization is a big area here. The fact is that every investor has different needs, and those needs depend on a wide range of factors in terms of their financial situation, their family situation, their risk tolerance. And because of robo-advisors use algorithms to tailor portfolios, they actually have a very good capability to customize portfolios to reflect this for each investor. The question is how to make this customization as painless and as seamless as possible. And different advisors are trying different routes to do this, some asking additional questions to their clients, some getting data from other platforms or aggregators, some using AI to tailor. But I think this trend will continue, and we'll see a range of new services from robo-advisors that offer better customization to investors. And I think that'll lead to better outcomes for investors in the longer term. Okay, I'll stop here for now and hand back to Adam. But if there are any questions later on, I'm more than happy to answer questions in terms of how the algorithms work or things like that. Thank you.
All right, thank you very much, Matt. So now we've come to our third speaker, Ronnie Tan. Ronnie has more than 35 years of experience in the financial investment capital markets industry here in Malaysia. He is responsible for strengthening the digital investment management ecosystem, aside from creating a working culture that promotes customer centricity, creative innovation, and collaborative intelligence. So therefore, he runs the GEX MD Senam Berhad as the Chief Executive Officer. And it's very pertinent that he's here today to also talk about MyTio's value proposition and what it could do for the general robo-advisory industry in Malaysia, and hopefully stimulate more investment participation, especially from first-time investors. So without further ado, Ronnie, take it away. As we're waiting for Ronnie to come online, I would urge all the audience to please direct any questions you may have to the panelists to the Q&A chat. So we'll be very keen to take on any questions that you may have within our time limit, and hopefully stimulate more interest in this general area of robo-advisory. As you understand it, it's only been about close to 3 years that we've had this new fintech companies come online in Malaysia. So it's a very pertinent time for you to be asking away. Thank you. Take it away, Ronnie.
Hi, can you hear me? So, sorry, my line, the screen was off for a while just now. Okay. Well, thank you very much to Adam, Matt, and Rizwan. Okay. What I intend to do is very basically go and start off with covering the market narratives first. Yeah. Okay. And I think that both Matt and Rizwan have given a very good coverage on in terms of the market situation and what the robo-advisor intends to do. Okay, let me put into a better perspective. Okay, what are we experiencing today, and most important in the Malaysian context? Okay, today we are hit with a lot of COVID-19, the pandemics, the geopolitical tensions, and economies are slowing down, high employment rate, and a lot of stimulus relief package and injection of liquidity, a low interest regime. And what does it really mean to the man in the street, the general man in the street? Yeah. So a low interest regime, for example, a low interest regime, there are two sides of the coin. One is really to help the borrowers. But what about the savers and the pensioners who really depend on low interest regime? What do they need to do in this type of this unprecedented kind of a situation, right? Okay, and in terms of the market, there seems to be a lot of disconnection between the market and the economy. And you look at the stock market, both in US and in Malaysia, there's a lot of pips. The market is moving up and down. Okay, and when things are mentioned, when the drugs, the vaccine drugs, Moderna and the Oxford vaccine are announced, the market moves up. When the stimulus program be announced, the market moves up. Okay, but when the coronavirus pandemic results are increased, the market drop again. And you can see all this market activity moving up and down, right? So it's really a very volatile market. Okay, so in terms of a robo-advisor, what do we hope to do? Okay, looking at the marketplace today, there are basically three segments of people who are facing such a problem. Okay, there's a bunch of the segment of young adults, millennials, who are starting to save and to grow their wealth. And there's another segment of experienced professionals who are starting to accumulate wealth and contributing to retirement savings. And obviously, there's another segment of retirees consuming and distributing wealth. But in current market situation, okay, does it allow them to do that? A lot of people will be asking, is it a good time to save? Okay, is it a good time to save? Okay, and with such volatility, what do I do? Would the market crash? Okay, do I have enough knowledge? Do I have the technical knowledge? Do I have time? Do I have the emotional bias? Do I have the emotional control to do a trading or invest? So there are a lot of these lingering worries in the marketplace today. So that's how we as a management, as a digital investment management robo-advisor comes into play. Okay. With this in mind, back as Matt has mentioned, back in 2019, we have formed a company called GexMD. Okay, basically GexMD created a product called MyTeo. Okay, in terms of serving the market, taking into consideration the things I talk about. How do we help the general market in terms of investment? Right, this is a very quick rundown. Okay, so and I think it's important. As Rizwan has mentioned, there's an ecosystem of governance and trust. Okay, it's very important that our service is licensed by Securities Commission, and the funds that we invest in, both in terms of the asset classes and the money that we put in, are all held in custodian under trustee. Okay, and that's very, very important. And I would like to make a little correction to what Rizwan has mentioned earlier. Okay, it's not entirely a black box, the digital investment management. Well, I prefer not to call it robo-advisor because it seems to be too cold, very cold, and seems to have a black box. But in actual fact, it is rhythm. It's been managed. You know, the whole the service is being managed by by the algorithm that's been designed by human. Okay, a human that input in a lot of fund management concepts and skill. And in terms of MyTeo, we are a bunch of fund managers who are ex Nomura, okay, and BlackRock, and all the activities are being monitored by in addition every month being monitored by a committee of investment. Okay, and well, this is a team behind MyTeo. I can see they're very reputable people who have a lot of experience and knowledge in the marketplace. Yeah. Okay, I want to get into the real. That's by way of background. To give you a certain background of what's happening. But I want to go through a glimpse of what MyTeo is actually trying to do. Okay, and as mentioned, and I also like to correct one thing that Rizwan has mentioned. One of the key propositions that MyTeo has is really the power of customization. Okay, each individual, okay, basically you ask 5 questions, and by asking these 5 questions, we're able to look at the profile, the risk profile of individual. Okay, and we believe each individual, regardless of your age and your profession, have a very different outlook in terms of your risk and your investment perspective. Yeah. So we ask 5 questions, and these 5 questions really is trying to help us to gauge the kind of investment that we should be structuring for you as an individual. Okay. Together, we have 231 possible constructions. Okay. And some of the key things we look at is the age, your asset size, okay, your risk appetite, and your investment horizon. Okay. And we segregate it into three functional portfolio, mainly the growth, income, and inflation hedge. Okay. The growth really is ready to grow one asset over a longer term with obviously a higher risk. Okay. The income are more targeted for people that require a regular cash flow to cover natural living expenses. Okay. And inflation hedge is really to protect the assets against the erosion of inflation. Okay. How it works is by asking 5 questions, we're able to structure a optimized portfolio depending on your risk portfolio. For example, if you are a younger millennial, which probably about 30 years old, we believe you have a longer horizon to invest in. Therefore, you can afford to take a higher risk. Okay, and we may allocate 60% of growth, 20% of income, and 20% of inflation hedge. Okay, whereas if you are a retiree or mid-age, okay, with a lesser investment horizon, okay, we could be structuring a portfolio that is 50% income, 30% growth, and 20% inflation hedge. Okay, what is important that it is not goal-based. It is not really a goal-based or asking a certain level of risk. Now, regardless of your goal, regardless of your aspiration, you must have a certain risk profile. Okay. However, for example, we call it omakase. As I mentioned earlier, we could have structured a portfolio that is, for example, 60, 20, 20 in terms of growth, income, inflation. However, you may choose to say that I want to have another portfolio Okay, one is omakase. Omakase means that let MyTeo takes over in terms of constructing an optimum portfolio for you. Okay, in addition to that, you may choose to have a second portfolio. Okay, which you intend to say that, well, I think I'm willing to take higher risk. I may say that I want 100% growth. Okay, or I may be very risk averse. I want to have 100% income. In that situation, you could end up with your choice one portfolio that is omakase. For example, I've just mentioned omakase could be 60, 20, 20. And another second portfolio could be 100% growth and 100% income, another portfolio. Okay, so that is the power of allowing you to customize your own portfolio. Okay, and what is important to mention is under MyTeo, okay, we have a universe of 59 ETFs. Yeah, 59 ETFs that cut across 10,000 over companies over 86 countries. Okay, it's a very, very well diversified portfolio, which I shall elaborate a bit further as I go along in terms of explaining the ETFs and companies. I think it's very, very important to touch on diversification. Okay, I think most of the people will use diversification in a very loose term, but in MyTeo, we believe diversification really need to cover the asset classes, the countries, and currencies. Okay, whatever portfolio to invest in has to take into consideration the asset classes, the country that you invest in, and obviously because you're going on a global investment, you have to balance the currency risk too. Okay. Okay, as I mentioned, these are the countries that we have cut across. I have to go a bit faster in view of time. Yeah. Okay. It is also important to let me explain to elaborate on ETFs, which I think Rizwan have touched on. Okay. For example, like ETFs, if you have invested, okay, you put about let's say you put $1,000 into MyTeo. Okay, we do not invest in any particular stock per se, invest in ETFs. Okay, let me just highlight an ETF called Vanguard Value, for example. Okay, in Vanguard Value, by putting $1,000 ringgit, okay, you could be ending a fraction of Vanguard ETF. So what really is Vanguard ETF? You look at it, it consists of all these companies: Johnson, Berkshire, JP Morgan, United, Intel, AT&T, Walt Disney, so on and so forth. So you do not invest in a single company. You invest in a pool, a basket of companies, and all these are listed companies, right? Okay, and for example, like if there's another ETF which we hold is QQQ ETF, for example. Okay, so invest in when we construct a portfolio, this is one of the ETFs part of your portfolio, and this consists of stocks like Microsoft, Apple, Amazon, Facebook, so on and so forth. Okay, so this is the power of having an ETFs, investing in the ETFs. As I just mentioned, $1,000 ringgit example, if you invest in $1,000 ringgit, you are actually spread across multiple companies. Okay, and this is what okay. Well, in terms of the global marketplace, ETFs and active management is very, very popular. In fact, in US and Malaysia is merely doing a catch-up game. Back in last year, back in 2019, in fact, passive investment has the total value going into passive investment in US have reached a figure of $4.7 trillion. Okay, and that is as close as, in fact, it has surpassed the active management funds, which is about 4.6 trillion. So a lot of money been put into passive funds instead of active management. And statistics shown that for the past 10 years, okay, the people who have outperformed using active management, the outperform the market, there's only 11%. So active management is really very difficult to try to beat the market. Yeah, okay. Now, okay, to put into better perspective, let me try to illustrate MyTO performances, right? So, okay, and it's so important to reflect on what is happening today in terms of the pandemic, and there is an economic recession going on, okay? And if you look at the statistics for the past, from 2007 to 2020, okay, you look at it in terms of the pandemic which happened, the H1N1, 2009 to 10, okay, and obviously there's also the global financial crisis which happened between 2008 and 2009. And you look at the chart, okay, there were a drop. The market basically crashed. Okay, in 2009 it crashed by the New York Stock Exchange probably crashed by about 37%. Right? So, and it took, after some time, it recovered back. And the same thing with S&P, Nasdaq, and the same thing happened in Bursa Malaysia. Right? So, okay, in terms of MyTO, we have done all this back testing. Okay, back testing that put us to see what would have happened during 2008, okay, the crisis, and until now. How would MyTO behave if MyTO were launched in 2006 and face a crisis? Okay, so MyTO, if we have launched in 2006, we will see a drop of 37%, yeah, during the financial crisis. Okay, but look at how it rebounded. If we consistently have invested and continue to do so, as of 2019, you would have obtained 149%, right? So I think I'm running out of time. Yeah. Okay. So, and to put into perspective, the year to date 2019 since we launched, you look at it, these are our performance. Okay, our performance will show that as a balanced fund. Okay, assuming because as I said, each individual has its own risk profile. Assuming it's a balanced portfolio which you have 33%, and 33% of income growth and balance in equally. Okay, your return for last year would have been 15.9%. Okay, and if you know, for the income is 9.6%. For the growth is about 19.8%. So this is our performance. And if you have put the money in terms of cash, okay, in terms of FD, your return is basically only 3.1%. Okay, that's our 2019 performance. Okay, and what about from 2019 to 2020 to June 2020? You can see that our performance, okay, is also turning positive. Okay, and more importantly, okay, what happened during MyTO in March 2020 during MCO period? Okay, okay, if you have invested your money, okay, during March and did not panic, okay, your performance in terms of growth, okay, would have grown by 15% during that period. Okay, and in terms of income, you've grown by 4.46%. Okay, and in terms of your balanced portfolio, you have grown by 9.9%. Right. Okay, what I wanted to show is in terms of in case an investor take a very conservative approach, okay, which means that what if he decide that he wants to have another portfolio One is omakase portfolio, which is, as I say, mentioned, it could be a 60-20-20. What if an investor, a retiree, decided to take a very conservative approach? Okay, and we have two choices. He either put it into an FD or a money market funds. Okay, and if you look at the money market funds, you're getting a return of about, from January until June, a return of 1.19%. Okay, and if you have put in the same amount in MyTeo conservative portfolio, which is 100% income, you would have obtained a return of 7.46% as opposed to 1.96%, right? Okay, so the general message to the investor in Malaysia is, well, as I said, there are a lot of happening in the market, a lot of uncertainties, okay, and a lot of worrying that the interest rate is moving down and what could happen, okay? And we strongly believe that you should practice diversification, stick to your investment plan, and stay within your risk appetite. Have the right investment mindset and take a longer term perspective. As Matt have mentioned, in Japan, majority of the customer practice dollar cost averaging, which means that they put in money on a regular basis. And the same thing happened in MyTeo. A fair bit of our customer, rain or shine, they'll put a regular savings funds. Means that it's a make it as a they're very disciplined to put a certain amount to save it regardless of the market, right? Yeah. Well, I think that these are the similar investment philosophies that have been taken by some of the greatest investors, and I think these are all household names which basically practice what we just mentioned. Okay, and so it's very easy to start off. When a MyTeo is very simple, and as I say, it's all through digital and through fully app. Okay, and what I wanted to close it off is that we're having a very special promotion for MyTeo start tonight. Okay, and thank you very much for the audience for listening to us. Okay, and use a promo code myteo.star. Okay, if you start to open an account, you put in the $300, we will top it up with $10 into your investment. Okay, and if you put 1,000 ringgit, okay, we will also give you $10 to help you to top up your investment, and you get a 2 months management waiver fees for you to come and try. On top of that, you still have a chance to win up to 500 ringgit. Okay, and this ends on 31st of July. Basically, what we wanted to do is really to encourage all the listeners to go in and try our product, have a go at it, and invest. Right? Okay, and I think my time is up. Okay, and there are many more things that I would like to elaborate, but in view of the time given, it's too short to cover too many things. Yeah, but maybe I could take up the Q&A and take it from there. Yeah, Adam?
Sure, fantastic. Yep, thank you very much, Ronnie. So let's, ladies and gentlemen, thank you very much for the presentations from Matthew, Ronnie, and Rizwan. Let's go into Q&A. We've got numerous questions, so I'm very keen to address some of them. So I suppose I'll start with the one at the top. I'll combine some of the questions for brevity. So the first question is for Ronnie and Matthew, really. What is MyTeo's unique selling proposition? And do you have any plans to introduce Sharia-compliant portfolios in the near future? As you would understand, some of the Malaysians out there are very specifically particular about Sharia-compliant portfolios. This is a move that some funds like ASB has also looked into, so that they are able to cater to this segment of investors. So, any views from MyTeo? And what's your USP, and whether you have plans for Sharia-compliant portfolios? Thank you, gentlemen.
Okay, let me try to take up the questions. Okay, first of all, thank you very much. The unique selling point. Okay, and as I mentioned, one of the key unique selling point is the way MyTeo structure a portfolio. Okay, as I mentioned earlier, we're able to customize the needs according to each individual appetite. We ask 5 questions and we are able to structure a product. Okay, there are 231 customization. We strongly believe that there's no one size fits all. A guy like Adam could have 60, 20, 20, for example. Okay, Rizwan, with due respect, could be more conservative in terms of his 5 questions. We could have structured a 80, 10, 10. Okay, but more importantly is having structured this product, your risk and your aspiration may change with time. For example, like Adam. Okay, Adam, as I say, we could have structured a 60, 20, 20, but because halfway he may have a certain obligation, a certain need that he believed that he should not be taking too much risk because he's investing in a new fintech business, for example. Yeah, that he wants to be more risk averse. What he could do is he could still remain his 60, 20, 20 and create another new portfolio which has a lower weightage in equity and move it to 80, 10, 10, for example. Okay, and that is a flexibility. Okay, and as I mentioned, what about for the retirees? The proposition, he could have maintained again because of the risk profile, 40, 30, 30, for example. But he may say that I think I should move some of the funds into a more conservative, but get me a better return than fixed deposit. Then he may create a second and switch it 100% to income. Then, therefore, he has another 2 portfolio. And when you switch these funds, okay, there are no additional transaction fees, there's no switching costs, and whatever you do, okay, we also rebalance. We will rebalance and optimize your portfolio. I think that's one. This is a very strong proposition, and I think that we're the only one who is structuring that product in that sense. While we want MyTeo to do the omakase, which means that let us take care for you, right? Let us organize the menu of food for you, but you can still choose your own menu if you choose to. Right? That's the answer to the first question. The second question in terms of a Sharia, okay, yes, we have plans. We are looking into the possibility of introducing Sharia. Okay, we are doing a market research. Okay, I think it's more important that we want not for the sake of pushing a product. We want to create a product that is very customized to each individual need, right? So we're doing that the profiling on that part. Yeah. Yeah. Is that a third question? No.
Fantastic. Yeah, that's very, very succinctly put.
Yeah.
So let's have some of these questions answered as well. I think another topical question is, of course, cryptocurrency. So cryptocurrency, maybe this is something Matthew or Ronnie would take on because clearly there's some interest in investing in cryptocurrency after the bull market in 2017. So the question reads, is MyTeo or other robo-advisors that you know of is looking to add cryptocurrency into its portfolio mix? Ronnie or Matthew?
Matt, you want to take it or should I take it?
I'll start and then maybe you can add afterwards.
Okay.
I think it's
fantastic, guys.
A really good question. I mean, if you think about like what our products are trying to achieve is to provide a long run investment return for our clients. And so in that context, we have to choose the vehicles that we use in terms of things that we think are going to be around for a long period of time. and things that we've got confidence are going to, that we understand how they're going to perform. And things like ETFs have been around for over 20 years. We understand how they perform. We understand how they work. And we expect them to be around for at least another 20 years as well. With cryptocurrencies, the track record is so much shorter that we've got no confidence that a particular cryptocurrency that we choose right now is going to be around in 5 years' time. We've no confidence in terms of how liquid it's going to be in the future. We've got no confidence in terms of how volatile it's going to be. And so I wouldn't rule out cryptocurrencies in the future. They may turn out to be a valid investment vehicle, but I think it's way too early to include those in a product that's meant to be a long-term investment product.
If Adam, if I may add on to that point, okay, it is very important for the audience to really differentiate between trading and speculation versus an investment. Okay, I think it's very important for the public to realize that a robo-advisor platform like MyTeo, it is for a long-term investment. It is not something that you go in and punt and try to catch the ups and downs. Let me give you an illustration. Okay, just now I mentioned about the ETF that we hold in MyTeo universe, the QQQ. Okay, in QQQ, one of the stock, the underlying stock is Tesla, for example, Tesla. Okay, Tesla, since it first launched, listed in 2010. Okay, and now it's 2020. After 10 years, Tesla share price have moved up by 7,500%. Okay, the share price itself within 1 month have moved up to 50%. Okay, so if you are a trader, if you are lucky, you bet on the right horse, then you have tremendous gain in Tesla. Okay, but what happened if bet on the wrong horse? Okay, now and that's where the power of ETFs, it consists of multiple asset, multiple underlying, like you may have Tesla, you may have Microsoft, and they balance off on the long run. Okay, and for example, in Malaysia, closer to home, the glove stock last week, Tesla moved up 50% within 1 month. The glove stock in Malaysia last week, without mentioning the names, within the same day, moved up and down 30%. That kind of investment is really strictly for trader. But in terms of MyTeo, the purpose is really helping to people to invest and save, rain or shine. Okay? You put the money in, and we do not speculate, we do not time the market, we do not try to catch an internet sector, for example, and bet on a technology sector. We do not do that. We well spread our portfolio, well diversified into multiple asset classes, okay, covering multiple sectors, multiple countries, so that you is well diversified, lowering the risk and have a very good return. Okay, so in terms of cryptocurrency, I for one, I'm not too sure how you feature into that the investment horizon. Yeah.
Fair point. Thank you very much, Ronnie and Matthew.
Yeah.
So I have a question here, which is, I suppose, something very pertinent for Rizwan. Rizwan's a veteran of the fund management industry. So we have a question from the audience that reads, what's the discernible difference between robo-advisors and UT, which is unit trust? So I think the question really is about ETF versus unit trust. Can you give us some broad strokes on the returns or perhaps the portfolio mix, very briefly, Rizwan?
Sure. Thank you, Adam, for that question. I think unit trust is in Malaysia. It is called something broadly called collective investment scheme. Yeah, for unit trust, and it is actually also in a way certain characters similar to ETF, but not necessarily, because unit trust could cover a broader type of financial product like bonds, like money market, like many other things, and not necessarily just listed stock. And there is actually a unit trust management company that's also licensed by the SC that manages all these unit trusts. And there is actually a daily calculation in terms of what are the value of all these unit trusts, similar to ETF. And the characteristic of each unit trust is different depending on the instrument that is being gathered or structured together. And there is also an obligation for the unit trust management company to ensure that there is a proper valuation being given to each and every single unit trust. Characteristic wise, there are similarities with ETF, but in terms of coverage, in terms of whether it is similar to ETF, there's a distinct difference, because ETF largely looking at, like what Ronnie said just now, listed stock mostly, and not really looking at other areas which may cover perhaps sometimes other instrument that is also being put together as a unit in a trust. So this is where I think we need to make a distinction clearly. And I think one of the companies in Malaysia, I'm not going to mention, they have not just one, many companies in Malaysia have a universe of unit trusts that they manage, and they offer this to investors. And the difference is they don't really give you the flexibility that is given by the robo-advisory on a consistent basis. And and most of the unit trust company are still using a traditional distribution channel, unlike the robo-advisory. So in my personal opinion, there is a potential for the unit trust company to evolve, but that really depends on them in terms of deploying technology, especially in terms of algorithm, in terms of emulating what the robo-advisory is doing. Characteristic-wise, as far as the product, I think there's a lot of similarities, but there's a lot of differentiation that investors especially need to know in terms of the universe of this product that we mentioned just now. Yeah, I hope that answered the question.
Yeah, if I may add on to that point, Adam. Hello.
Yep, very sure. Yeah, very briefly. Yeah.
Yeah, I think thank you very much, Rizwan. I think I want to put another point forward is, with due respect to the unit trust industry or mutual fund industry and the agent. Okay, basically there's in the market today, the market size of the unit trust is about in Malaysia is about 400 billion. Okay, and the unit trust and the agents are definitely doing a fantastic job. Okay, but one thing we need to clear is, as I said, the main objective of a platform like MyTeo, we want to make it a very, very affordable platform for the industry. Okay, for the moms and the pups and the young millennials. Okay, certainly our cost as a platform, because it's highly digitized. Okay, it's a fintech company, highly digitized, and that's why we are able to reduce our cost to a mere 1%. But if you buy a unit trust, okay, because you are engaging agents, okay, they will have an upfront fees probably about 3%, okay, and then the AUM fees of about 1.5%. So it is definitely much more expensive, and we believe that as MyTeo, as a platform in Malaysia, we need to promote financial literacy, making it very affordable, really empowering and enabling the so-called rakyat affordable way to invest, okay, in a very wide, diversified mechanism, okay. And what we have really in mind is the cost, especially, which I did not elaborate previously. We are also extremely worried for the savers and the savers and the retirees because of the very low interest regime, okay, of less than 2% return, okay, and basically, and I'm sure majority of them would not have the opportunity or privilege enough to have a wealth manager or somebody to take care for them on how to allocate and how to diversify. Yeah, and that's where the main thing is a very good diversification of letting you diversify into commodities, equities, funds, mutual, treasury, bonds. As I say, it's a very well diversified. I think this is one of the key things that we want to put forward.
All right, fantastic. Thank you very much, Ronnie, for the insight. So I believe we've come close to the end of the session. So I just need to give, I wanted to see if we can engage all the panelists to give a summary of their views, I guess their hopes for the Malaysian investment industry with the emergence of robo-advisors and digital investment management service. I think generally the audience we have here today on this webinar is also people ranging from CEOs, CFOs, all the way to guys who are just dipping their feet into investing. And you have all these digital tools that are meant to make investing a bit less daunting, a bit easier for you to get into, even for the benefit of peers and people who just started work. So maybe can we get a very short 1 minute summary from Matthew, Ronnie, and then finally Rizwan on what your hopes are for the investment community in Malaysia and how they should react and respond to the emergence of robo-advisory services like Matthew?
Yeah, so
very short.
I'll try to keep very short, but I think the point is that technology lowers hurdles. It lowers hurdles in terms of cost, it lowers hurdles in terms of communication, and it lowers hurdles in terms of how complicated things are. And all of this makes it easier for people who have never invested before to try investing. We've seen that work very well in Japan, and I hope it works the same way in Malaysia.
Fantastic. Ronnie?
Well, yeah, okay. I think that most important thing, I hope the audience can appreciate that the power of a algorithm, a digital investment. Most important thing is there's no emotional attachment. It's not biased. We do not time the market. We do not go in and out. In fact, during the MCO period, which gives us a lot of confidence and encouragement that our funds for that period have gone up by 170%, even during the time of uncertainty. Okay, and our customer base that start to open account had gone up by 80%, which speaks for itself that people should be looking at this kind of platform that is a very cheap, an affordable kind of service. But please think long term. Do not worry about the short term. And when you see a short fall in returns, you exit. That is the last thing you should do. So my message to to all the audience is stay invested, okay, but don't put everything into the same basket. Okay, diversify. Yeah. Please set aside some funds for your emergency funds, for your emergency needs, and never ever borrow to invest. Yeah.
So no leverage, yeah?
Yeah, no leverage. Okay, the only thing that you should do in terms of, we have a lot of queries from our customer, and our advice to them, they say that, well, in this difficult time, why it's so difficult to make money and you ask me to save? Yeah, and if you look at the whole industry for during the MCO period, okay, the spending pattern of the T20, B40, and the M40, the spending have gone up by 50 to 60%. So that's 50, 60%. Who say you cannot save? You do not need a pandemic episode to tell you to save. You should have that discipline and put that 40-60% instead of instant gratification. Do not save your money for others. Save it for your own.
Sure.
Set aside your
Sure.
investment for your own. Yeah, so that's my advice.
That's it. Yep.
Investment.
All right, fantastic. So just to cap it off, Rizwan, very 30 seconds, if that's all right, Rizwan.
Just want to share with everybody that you need to understand yourself. This is not for everybody. If you are the aggressive, knowledgeable, robo-advisory may not be for you. But you need to understand and continuously learn about investment, because there are various approaches that you can take in terms of creating and enhancing your wealth. So don't take it easy, because there's never easy route in terms of investing. And definitely there are responsibilities that you need to actually execute, especially when you are involved in technology platform, because cyber attacks, cyber securities, and making sure that you yourself as an individual are not compromised, because these are the new risks that's coming when you are involved with technology. With that, I'll stop here. Thank you for your time.
Ladies and gentlemen, there you have it. Thank you very much to the panelists, Matthew, Ronnie, and Rizwan, for joining us this evening and sharing your insights. And everyone, thank you very much for taking the time out of your evening to sit down and have a listen and have a chat with us. We hope you've gained some valuable insights which are relevant to you with respect to investment management and the emergence of robo-advisory services like MyTio. That's all the time we have for today, ladies and gentlemen. I will now hand back to our host from the Star Media Group tonight. Stay safe and have a good evening. Bye-bye.
Thank you, Raja Adam, for moderating the session, and also thank you to our speakers for tonight, Rizwan Aziz, President of FinTech Association of Malaysia, Matthew Stewart Box, COO of GAX MD and Money Design Japan, and not forgetting Ronnie Tan, CEO of GAX MD Berhad. I'm sure that our audience learned a lot tonight, and tonight we'd like to also share that MyTio is celebrating its first anniversary this month. And so in conjunction with the celebration, they are actually currently running 2 promotion programs. You may actually get the promo code, which is MyTio Star, when you sign up and place a minimum deposit of 300 ringgit and by the 31st of July 2020, and you'll be able to enjoy some special offers. These offers we will actually send over to you in your thank you email, and it's also available on our Facebook Live post. If you do want to find out more on MyTio, please do go into mytio.com.my. So before we end, please help us complete the evaluation poll, which will appear on your screen now. And also thank you once again to MyTio for making tonight's session possible. We are glad to partner with your esteemed organization to educate, empower, and equip Malaysians for this new form of investing. If you'd like to find out more, again, mytio.com.my. So good night, everyone, and stay safe. Thank you.